Hey guys, welcome back to the channel. Today is Thursday, March 14th. And what we'll take a look at today is some of the macro data that just got released. So we'll take a look at the PPI, which is the producer price index. We'll take a look at the initial jobless claims, and then we'll take a look at retail sales as well too. And then the last thing we'll take a look at is how Solana's doing. Solana's been on a really good tear right now. So we'll see how Solana looks technically, and then what's kind of on the roadmap and what's next for Solana. So 2 out of the 3 major data that got released today on the 14th, which is initial jobless claims. Initial jobless claims is just the number of people who are claiming they don't have a job right now, and it is at 209,000. The forecast was 218,000, so it's a little bit lower than what we were expecting, and then a month prior to that was 210. So I think right in line with the prior month. The Fed's kind of looking at the labor market right now, and for the most part they think inflation is under control somewhat, and so their second piece is the labor market. What they want to see is really a softening labor market, and what that means is that unemployment and then initial jobless claims should be ticking up. Take a look at this is one data point, but we'll take a look at what the entire data set and then the trend looks like, which is way more important than one data set. And then the other piece of data that got released today was retail sales. It was recorded at 0.6%, and it was forecasted at 0.8%, and the last month was negative 1.1%. So retail sales is just how retail businesses are doing. So that's from Clothes to Home Depot to all these things that you and I kind of shop at. So retail sales just kind of gives you a picture of how much demand there is in the economy. When retail sales are high, that means the economy is churning, people are buying things, and it's generally good for the economy. That usually sometimes could lead to inflation as well too. So this number just gives you some kind of metrics around those two things. So those are the kind of the absolute values and the trends and the data points for today. Let's take a look at the trend and how the retail sales and the initial jobless claims look. So moving over to the trend. So again, the data points are a good reference point, but what we want to do in trading and investing and just a lot of things in life is we don't want to put too much emphasis on one single data point. What we want to do is kind of look at the trend and how everything is doing trend wise. So we take a look at the United States jobless claims right now, not really a clear trend. Things have been just sitting around this, between this 200 to 220 range as well too. So, that data point doesn't, make us think of any other situation. I think right now it's just kind of sitting in nowhere. So we'll see if this accelerates up or down. And I think that will give us kind of a good indication of how the economy is doing. Again, what we mentioned is that the Fed wants to see like a softening labor market. So they probably want to see this number tick up higher just to let them know that they can start cutting rates and adjusting the economy. And then I know we went over this a couple of videos ago when we were looking at the unemployment rate. That, as you can see, is kind of starting to trend up, which is good, which means the labor market is kind of softening. I think the Fed is probably going to want to see this, up in the 4 range and a little bit under 5%, just to give them a little bit of a area where they can say that, hey, we fought inflation and the labor market is softening, so we can cut rates. And then if we look at the trend for the retail sales month over month, as you can see, looking at the chart, it's a little bit more clear than just looking at a single data point. So we're here at 0.6. Again, the top of this range seems to be at around 0.8 or 1. And so things have just been kind of meandering along. What we want to do is maybe next month see an uptrend here. That means that, retail is picking up, and that can kind of give us a good indication of how the economy is doing. If, the next data point is within line or down, that will give us some more indications. But again, this is why, there's not really clear trend right now, and it seems like everything's just flat line, at least for retail sales. So that's why the data point, and we'll talk a little bit about in the next piece with some of the headlines that the news gives out. It's really important to at least take a look at the data and look at the trends rather than the specific data points. And the last piece of macro news that got released today was the PPI report. So wholesale inflation rose by 0.6% in February, much more than expected. So, the headline's kind of scary. The headline is kind of it's meant to kind of make you feel some type of way with it, and it kind of makes you feel scared about it. But we just looked at, some of the trend for the economy, and things are doing okay, and we looked at some of the other inflation metrics and they've been fine. So these headlines kind of scare people, and that's why I don't typically look at headlines, at least for my trading and investing purposes. What you want to do is kind of look at the data yourself. And so okay, so diving into the CPI, the PPI here right now, as you can see, we had this big spike here, and PPI was, above 10% year over year during the COVID and during the supply chain issues, but that's dropped off significantly. And that's probably what led us into, some of the slowdowns in 2022 and 2023. But here, we did have a little spike here earlier in last year, and things are kind of just trending along right here. So right now we are at 1.6% year over year, and then we're at 0.6% month over month. So as you can look at see the year over year data, not much going on there, and it's kind of the opposite of the headlines. It's not really much more than expected. It's really just another data point, and if it starts going above this, into the 2.5-3% range, then that headline would hit us a little bit differently. But again, I wanted to kind of show you guys the difference between reading headlines and then looking at the data for yourself. And same thing when we look at the month over month. We did have this peak here in January, I think, and it's at the same levels as it was in February. So again, nothing really alarming, and until we see this kind of break out substantially, it might not be too crazy. And then what they don't give you is also the context as well too. As we know, the macro environment right now is between, a reflation, which is inflation going up and growth going up, and then Goldilocks, which is inflation going down and growth going up. Those are the macro regimes that we're in right now, and those headlines don't kind of give you that context that, it's okay that inflation is going up. It doesn't mean that inflation going up is bad. It just depends on what part of the business cycle and where are we from a macro environment that inflation's going bad. So I think that a lot of people are really kind of focused on inflation right now, which is not necessarily the best thing. They should be kind of focusing and looking at some of the things that are more important, which is, increasing growth and how well the markets have been doing here, instead of, just looking at these headlines and being afraid to be invested just because of some of these major headlines. And then the last thing I wanted to show you guys is how to look at this data yourself. I use Real Vision. They have a really great dashboard on there, but if you're not a Real Vision subscriber or member, you can also do it yourself on Tradingview. What you can go in here, click on the charts, you type in USPPIYY right here for the consumer price index. You can choose month over month or year over year. Let's take a look at the year over year number. And here you go. You can have the trend and look at the trend yourself. And I'll put a link below for you guys of the different macro indicators or macro data that got released today. And you can kind of keep track with that by yourself on TradingView or some of the other metrics. The Fed site also has some of this data as well too. So take a look there and kind of look at the data yourself instead of reading headlines and looking at the news and kind of having them sway your opinions, rather than looking at the data yourself and then determining it with your kind of framework. And then the great thing about, having the charts available here, you can actually apply technical analysis to this as well too, because that's a great thing about technical analysis. You can apply it to any data set here, and it's going to be super helpful for you. You can, I have, the Bollinger Bands in here saying that, and Bollinger Bands, for those who don't know, is a mean reversion model. So if it, hits some of the bottoms of the Bollinger Bands, that means it's going to revert back to this orange line. So it's okay that the data is kind of reverting back, and we saw some of that here with the previous cycles. So I wouldn't be surprised if the next couple of months we saw inflation creeping up just because the economy is growing. So this is just how you take a look at the macro data and then apply some trends, and then use technical analysis on some of the macro data as well too. And last thing I wanted to cover with you guys was just taking a look at Solana right now and the DeMark indicators. Solana's been, as I mentioned, been on a tear. We did get in here at around the 125 range down here, just adding to our long-term portfolio. I'm going to be holding Solana, at least for the next 12 to 16 months and seeing how that does. So I think this is just kind of the beginning of it, and we'll take a look at how the technicals and the direction that's giving us. So right now on the daily chart, we had some 9s for sequential, 9 for combo as well too. We did see a little bit of a dip. So right now, looking at the hourly right here, we hit a yearly high for Solana at around 173, which is great. We had these 13s hit here, so I think it's just probably going to consolidate here. I think if we hold above this line of 165, 166, that should be good, and then we can kind of continue the uptrend from here. Right now, the RSI, the daily does look overbought right now, but that's good. It doesn't necessarily mean anything bad. We also see that volume's kind of been increasing in Solana as well too. So just some bullish indicators still, even though it sold off and started consolidating for a little bit. And then looking at the weekly chart right now, RSI is just starting to move out of this oversold territory. So this just lets me know that we got a couple more weeks, months left of this to run. I think this last run lasted a couple of months here as well too. So I think overall, generally the direction is going to be up for Solana over the next couple of weeks and months. And we don't have any resistance here until this range right here, which is about like 225, and then some really upper targets here of 250 at some of the all-time highs. And I think we'll be making that in the next couple of months into April, May, June timeframe. I think Solana's going to start flying. I think things are getting overheated over here, and hopefully Bitcoin takes a little bit of a break. And if it does, we'll kind of continue to see this price action in Solana. So overall, Solana looks really good. Those who got in and those are holding long term, just kind of sit on it and kind of enjoy the ride as you see Solana appreciate. So I hope you guys enjoyed today's video, and I'll catch you guys next time.